Oh, that's a real thing.
That could absolutely happen.
Our money could be pointless very soon if we keep going the way we're going.
We just continue to kick down the can.
Now, beforehand, it was trade gold for money. Gold for money.
Was pegged to the dollar. Yeah.
Now, they're printing money and the gold isn't coming in.
All right. Welcome, everybody, to Generation H. Don't forget to hit that subscribe button and share this with your friends if you like it.
Like.
And click the like button, too. This show is sponsored by Management.
Thank them for letting us use their office space.
Yeah.
Property Management. Anybody in Richmond area, please let them know because they're great property managers.
Yeah.
So today we're just gonna be shooting the S word.
Can we cuss on this or no?
We can beep it out.
Carlos's daughters might be watching, so we can't cuss.
Yes.
So I mean, this is really just gonna be.
Yeah, we're just gonna hang out and kind of talk about everything we have going. Some of the things you have problems with.
So I mean,
what we're seeing in the market, what we think about the future of the market.
Kind of like market update.
Yeah, because things have changed
tremendously.
I
mean, for instance, you want to talk about the deal you currently just put on the market?
Yeah, so
that's big.
I'll talk about the first deal I put on the market in Petersburg first, which was about a month and a half ago when the market was really hot before they started doing interest rates. This was in, I guess, towards the end of March, but put a house in Petersburg on the market and got 7 offers all over asking. Now, 2 months later, I put another house in Petersburg on the market. And this one only got 2 showings and 1 offer. And I listed this one for $75,000.
How long before you even got the 2 showings?
So I listed for $75,000. I got 1 showing right the first day, and I was like, "Oh yeah, I might." I was actually on the phone with Carlos. I was like, "Yes, showing." And then they didn't want it. Dropped the price to $69,000. No showings over the whole weekend. Came back around and then got 1 more showing, and they did make an offer of $50,000 for it, but probably won't accept that. But I did counter, so we'll see where that goes.
That's a 30% discount. What do they think? What kind of market do they think we're in?
And at that point, I'd probably keep it. So,
keep it. No point in getting rid of it.
Yeah.
What
rent for like $700, so it's not like.
How does that make you? I mean, that's a big difference.
Oh yeah.
That's a big difference in terms of not just price, right? But like from the first deal to this last one.
Yeah.
I mean,
7 offers to no 1 bad offer.
But is it different areas? I mean, obviously the first one is
similar areas. One was a duplex.
Yeah,
might have
duplex.
Changed the reason.
Makes a big difference.
It was a little more fixed up. Had central HVAC. This one was still like pretty fixed up. Just doesn't have central HVAC, but
it's called a beautiful blue.
Yeah,
I think
it is beautiful blue. Yeah. We didn't paint it, but it is a beautiful baby blue.
No, but did I mean, how are you reacting to that, right? Like,
yes.
Is it the market? Is it the house in the neighborhood and the HVAC and the blue and the whatever?
Yeah, it might be. I think I just had too high expectations at first, so I was expecting to be like, oh yeah, I can't wait to sell this for way above asking price. I think that's probably how a lot of sellers are feeling right now with their houses. They think it's going to go for over asking, and they might not be getting the amount of showings and offers that they had hoped for. It might be because it's in a different part of Petersburg and not a duplex. It might be because it is baby blue and that might deter people. It might be because it doesn't have central HVAC, but it's all brand new painted, new flooring, new bathroom. Everything is, I mean, we make a pretty damn good rental. I mean, everything's rental grade, but I don't know. I guess it's probably also interest rates going up is probably another factor.
Yeah,
but
I mean,
I feel like that's hurting a lot of people right now is interest rates because you were qualified for X and now you're not qualified.
Yeah.
So now you're looking in that $300,000 price range, and you've been making offers for the last year on $300,000 houses.
Yeah.
Now you're only afford a $250,000 house.
And now they might not even want to make offers if they're
now
paying.
they might not want.
Yeah.
And I feel like it would deter me from moving because me personally, my interest rate is a 3.8 on my house right now.
Yeah.
Why would I move and get a 5 point whatever interest rate on a
So-
new house.
So then, isn't that going to make the housing market?
Yeah, that would be
Worse.
good. Yeah, that would make it more expensive because there'd be less supply, right?
So I
like if
still
people are
think-
thinking like you.
So
Yeah.
I think people are thinking like me, and it's going to create less of a supply. But then at the same time, the demand's going to be a little low because the people like me that normally would have sold and bought a new
right.
house isn't out there anymore because we're just staying put.
So then prices are going to continue to go up then.
So then prices are
So-
continuing
So that
to
means
go
it
up.
cancels one for one.
It's going to cancel.
So
one
then
for
is
one.
this
Yeah.
a knee-jerk reaction where people are like, oh, let me just pause,
I do.
see what happens.
Yep.
And then in 2 months,
Or 3
People are like,
years. So
oh, maybe I do just need to get a house because
yeah.
there's not that much inventory. I do need to move. I do need to get something bigger. It becomes a necessity, not a want.
And I think it's going to hurt a lot of people because last year we were going through this same problem. People were rushing to put their house on the market just because the market was so high.
Yeah.
And they were like, look, we'll rent for a year. And now guess what? That year is running up. Now they've run through that whole entire year lease. Now where do you go? Because now you're in a different price range because me personally, the house that I live in, I couldn't afford today. Or I could afford it, but I wouldn't want to afford a
Yeah.
house that I live in today because it's gone up $200,000 in value.
Yeah.
And now my house, for instance, would be an extra $1,200-$1,400 a month in mortgage because of the interest rates. And the house, so you got interest rates up here plus my house value up here. I couldn't afford that.
So then, do you feel like if say you were in the market that you needed to move into something bigger because your family was growing, whatever, right? Do you just wait then?
So I don't know if you wait because I
Do you
don't know if
wait
it's
or do
getting
you
better.
or do you buy and then hope to refinance in a couple of years when and if interest rates come down? Or
I kind of feel like yes. I feel like if you need to buy, then I think you should buy because I don't think prices are coming down. Unless we have a crash years down the road, I don't think the crash is going to be now or within the next 12 to 24 months. I just don't see
Or do you
how
think,
it
you
can
think that would
crash.
be later?
Oh yeah, a crash is going to be way later, and then you're stuck for 2 to 3 to 4 years.
Yeah.
I mean, now are you renting that whole time? Are you living with parents? Like, what's the situation?
So I think it's probably going to be a slowdown within the next 5 months. I would think.
Yeah.
I think so. I think it's probably they're gonna get a house at a
So
better
5
price.
months till like October,
Yeah.
Yeah,
And
about
then
probably
it'll
October.
and then it'll dip some more because of the winter months.
The winter months, yep, which is typical.
It might, but it might be less supply. I mean, it's always usually less supply in the
Yeah,
winter,
yeah.
so
It
it
is.
kind of stays. Yeah, it might dip a little bit more, but I mean, I
So
guess
you're
I'm,
saying home prices are going to dip?
yeah.
Okay.
I think in the next 5 months it'll dip like 5-10% year over year.
No kidding.
So a house that sold in July for $300,000 last July probably sell this July for $285,000.
Okay.
That's yeah.
Now,
I
and you
know.
think that's
So
just in
5%.
correlation to the interest rates? Or you
To-
think it's correlation to what?
Mostly interest rates.
Interest rates.
And I think there's going to be. there's going to be a lot of unemployment. I think a lot more unemployment than we've had. Is
Really?
also another big one. Yeah, a lot of.
So you think a lot of companies are already starting to lay off
Yeah,
and stuff
yeah.
like
I
that?
think a lot of Amazon overhired so many employees.
Yeah.
All these tech
Carvana,
companies.
a bunch of
Yeah.
people already like
And-
restructured.
So I just talked to my mortgage broker yesterday, and he was telling me that their refinances have died completely. So they've laid off 50%
Yeah.
of their brokers that only did refis. All
Yeah.
of them gone because
Yeah.
they're not doing any refis.
Wow.
Because I mean, who's refining? It's interest rates
Yeah.
are through the roof.
Yeah,
No one's
yeah,
refining
nobody.
on the residential side. Me and you are still doing commercial refis,
Sure,
but that's
yeah.
a different ballgame.
Yeah.
Yeah, tons of tech companies have also said they're not hiring as fast, or they're not even hiring anymore.
Yeah.
They're starting to slow down. Like Snapchat came out with that yesterday, and their stock dropped like 20% after they said that. But they also said they're going to miss earnings too. But I don't know. It might be like a little snowball effect of people losing their jobs and then not being able to afford a house.
Exactly.
Nonetheless, with the interest payments at where they're at, and
Now, with
less-
those scenarios, do y'all think it hurts us on rental properties? You think our tenants start to lose their jobs and things like that, or we going back down that rabbit hole?
could I think
Yeah.
I think if unemployment starts to go up, I think some of our tenants might lose their jobs. And
Yeah.
I don't know. What do you
'Cause I
think?
feel like-
I guess it depends on
Where they're employed makes a big difference.
yeah. So like for me, the litmus test was COVID,
Yes.
right? Like
Same.
so, I think most of my tenants now, with the exception of like new tenants, I would say that maybe like 80% of my tenants are old existing tenants
Yeah.
from during the COVID times.
Same.
Right? So like in that time, they still were gainfully employed. They still didn't miss rent. They still weren't late. Some of them did have to go. I would say one, two had to go through the RMRP program.
Yeah.
So we got government money, that kind of stuff. But like, we never missed a beat with rent.
Yeah.
Except for one of our rooming houses, which we no longer
anyways.
have. But like, that I feel like was the real litmus test for me, right? So like, if there starts to be large layoffs going forward, I don't know. I think that.
But they also got the stimulus checks. That's what was that? 4,000 total. Yeah,
Yep.
so they might have paid some rent with that, which they won't do in this time around because they're not.
Because they weren't the help.
Causes it. They also got. Did they increase like benefits to like a lot of people, not including stimulus checks, but like.
Yeah.
I don't know. Maybe I'm wrong on that, but.
For like
feel like they
they were giving
They were
out,
giving
Yeah,
child care
credits,
tax, the
child
credit
credits
and all
and
that.
stuff.
Yeah.
Yeah. I don't know.
which may not happen this time. Probably won't happen.
I don't
this
think
time
it's gonna
around.
happen
At least
yet
not
this
directly
time.
to the people.
And then does it come into play where I know y'all have talked to a bunch of investors like me that have 60 and 70% of their portfolio is in the RP program to where they're getting government assistance to pay that rent. What's going to happen with those guys? Because those guys haven't been paying rent anyways, and now they lose their job and they're definitely not paying. And that program ends July.
Yeah.
So now
you can't even apply for it anymore. Actually,
and you can't apply for it at all anymore. Yeah. So what's going to happen with
and
those guys? Are they going to have to sell some of their portfolio to make up for the difference? So they eat it, or
yeah, some of them have already been behind, or their tenants haven't been like filling out the application for the RMRP. So like they're already not getting money.
Already not getting money, and this has probably been going on.
But evictions are gonna
correct.
You can start so then they'll start to try to evict and get the sheriffs involved and all that. So then they might.
And will that bring more inventory? No, I guess it probably wouldn't.
It probably wouldn't. I don't think that it would.
Will it bring more rental inventory on?
So I think it would bring more rental inventory, and I think think about how backed up the evictions are going to be when that opens back up. I mean, there's thousands and thousands of people that haven't paid for a year, and they've been getting the assistance and paying their rent. Now that ends, now they get evicted. The court systems are going to be back slam up. I mean, they were already bad before. Now it's going to be way worse.
Yeah.
Because they're going to have a backlog of people waiting to file for that eviction.
Yeah.
Maybe they'll open the RMRP again.
And they might open it back up or something like that.
No way.
That's what my dad thinks. He thinks remember we bet on it. Yeah. He's going to open it back up. But
so
I feel like they would have to have at least somewhat of a reason, but unemployment might be enough reason for them to open it up.
Open it back up, Just like I think they're going to be forced, Fed is going to be forced to lower interest rates
so much money
because of this. Because I think it's going to negatively affect everything, and they're not going to want to look but so bad, so they're going to bring them down just a little bit to stable us around.
The problem
July
is
and August.
the interest rates have to go with inflation, so
the
Fed's not going to lower interest rates if inflation's still at 8%.
So now I heard this the other day. Do y'all think this all correlates to where interest rates have been so low for so long? Do y'all think that's what negatively affected to where we are today?
Because negatively, put us in a bubble.
It puts us in a bubble because interest rates have been so low for so long that it shouldn't have been like that, and now it's kind of hurting us because we're hitting 5%, and people think that's too much. When really it should have dropped to 3%, and then 6 months later it should have gone back up to 4%.
Yeah,
because that's what it's always done before, and this time it stayed at 3 for almost 2 or 3 years.
Well, throughout 2013 to 2020, they should have raised it to probably like 5 or 6%. But it stayed around 3 or 4 that whole time. Not one raise actually. The Fed from 2008 to like 2016.
Yeah. So I think that has negatively affected us now to where people have gotten used to those low rates, so they don't realize that back in the 90s, rates were 6, 7, 8%. It wasn't like it is now.
Yeah, and on top of that,
and it fluctuated, and the markets still steadily just kept cruising. It didn't really affect it. Now the market is starting to get affected because of interest rates.
And on top of this unbelievably cheap interest rates, they also have the money from 2008 that they burst in the economy.
Yes.
And then 40% of our dollars were created in 2020 that they
Yes.
burst into the economy. So that created an even bigger bubble because everyone had all this money and we're inflating all the prices of stocks, real estate.
Yep.
And eventually people run out of money and we might be getting to that time where everyone already invested or spent all that money.
Yeah.
And unless the
So we
government
need to
bails us
print-
out
Yeah,
again.
we need to print more money. I mean,
Yeah, but then
already
that'll
been printing
postpone
money.
it again.
I mean, yeah.
Eventually, it's going to be to a
It's
point
gonna
where you
hit eventually.
can't print any more money, and our dollar becomes worthless.
Exactly.
that's a real thing.
Oh, that's a real
That could
thing.
that could absolutely happen.
Our money could be pointless
Yeah.
very soon if we keep
'cause
going
they
the way we're going.
We just continue to kick down
Yeah.
the can.
Now,
Kick down the can,
beforehand,
kick down the
it was trade gold for money. Gold for
It was
money.
pegged to the dollar.
Yeah. Now they're printing money and the gold isn't coming in, so
Yeah.
it's really becoming a little less
Yeah.
every year over year. They're doing that, and especially so in the last 2 years, like you said, 40% of our
Yeah.
money was printed in the last 2 years.
Yeah.
That's unbelievable.
Yeah.
That is unbelievable. 40%.
Yeah. So you had
And that's over the
40% less
last-
cash.
50, 60, 80 years. I mean, how long have they been printing money? 80
Yeah.
years? That's crazy to think. That 40% of it is 2 years from today. That's crazy.
Yeah. No, I think we're in for a ride.
I think so too.
I think that we're in for a ride. I don't think that they can catch it. I don't mean to use like an old cliche, but like to catch this falling knife.
How?
Yeah,
How do
I think
you
they
catch
just
it
need.
at
I
this
think
point?
they just need to let it drop.
Yeah.
So did you change your decision? Are you saying prices are going to fall now in the next 5 months? Or are you still?
No. I don't think prices are going to fall in the next 5
okay.
months. I think prices are going to stay about the same. And
Okay.
like you said, if it goes down 5%, that's really not that
Yeah,
much.
it's not bad at all.
So if it does go down 5%, then that's still not bad.
Yeah.
Because
Yeah.
where they're at now is very inflated
Yeah.
anyways.
Yeah.
So it falling 5% is probably more where it should be anyways.
Right.
Because that $300,000 house probably should only be $285,
yeah.
which kind of
Well, it
stinks.
should probably
for-
be like 260 because what do we have 30%
Correct.
increase
Yep.
in home values in
Yeah.
the
But it
last 2
sucks
years?
for us because I know me. I have 3 houses that I'm about to put on the market in the next 30 days. So that
So-
kind of
so
sucks
that'll
because I'm
be-
hoping and
yeah,
keeping
we'll
my
see.
fingers crossed. It's not like yours to where I don't get any showings. So
Yeah.
now they're fully renovated houses, but one of them is in that 380, 390 range to where the
Wow.
other 2 are in the 220 to 280 range.
So you'll
So-
know if the market's slowing for sure.
I'll know for
List
sure
those.
because the second we put them on, I know 6-8 months ago, as soon as I put either
Yeah.
one of these 3 houses, I would have had
24 hours.
7
your
offers.
house, Yeah.
Yeah, in 24, 48 hours.
Yeah.
So I'm really going to feel it when it comes on. But I don't know. Y'all have been in the market long enough. I've been in for 5 years. So when I first started, it was normal to put a house on the market and it sit there for 30, 45 days before you
Right.
got one offer.
Yeah.
Now you might have gotten a few showings in that 30, 45 days, but you got one offer. And it usually was under asking price, and you probably accepted as long as it wasn't too far under asking
Yeah.
price.
Yeah. Now it's much harder, right? Because the prices are dropping more
Yes.
rapidly.
More rapidly.
In a
yeah.
way, it's dropping.
And
It's,
the bad
it's
thing
not
is, our rehab costs are going up.
Yeah.
So
Yeah.
really, our numbers are getting tighter and tighter, and we're usually eating that profit.
Yeah.
And people don't understand. They're like, "Oh, you flipped a house, you got to make $100,000." Prices of materials going
Yeah.
up 50%. Now I'm
paying
making way
more to
less.
buy the house.
Paying more to buy the house,
Materials are more expensive.
and now the market's
All of
slowing
our
down.
contractors are wanting to charge more money.
Yep.
Yeah.
Because
And
they got to
then
pay for
back end.
gas, and
Yeah.
I mean, gas is $5 a gallon.
Yeah.
To my contractor to get to my job sites, he's charging me a little extra per
Yeah.
job because he has to pay to get there.
Absolutely.
Yeah.
Yeah, my guy just asked for a raise too. He said,
Yeah.
when he brought it up, he was like, "The gas prices are going up, man. Cost of living."
Yeah.
That's how he first. That's how he brought it up. I was like, all right.
But it's true though. I mean,
Yeah,
we
no,
have
it
to.
is.
Me and you have to make more money
For sure.
at the end of the day
Yeah.
to keep our business the way it is.
Yeah,
Yeah.
and it's not like we have clients,
We don't have clients. Yes.
right? So we can't demand more money and, okay, they're not going to pay it. So, okay, I'm going to increase it 10% and that's how I'm going to cover my additional costs. You
Exactly.
can't do that, right? So, like,
So
I mean,
now I'm being more conservative when
Yeah.
I'm buying, and it's forcing me to be conservative.
but then that'll start to limit your supply, right?
It is, yeah.
Like your inventory being able to kind of turn houses. I mean, we've all talked about this. I mean, you're kind of coming to an end on some of your like bigger projects, right?
Yeah, I've made less offers, and I haven't bought one in the last 4 months.
Really?
Yeah.
Has it been 4 months?
4
yeah,
months?
since January. I bought 3 in January, and we're working on all those. And I haven't bought one in 4 months, but that's mainly because I'm waiting for this one in Petersburg to close. So I feel more comfortable with a little extra more cash
Sure.
in order to invest in more.
Yeah.
And that's like me. I mean, I've slowed down on buying. I went from buying 3 a month to start the year. 3 in January, February, March, April. We only bought 1, and then in May we only bought 1.
Yeah.
And it's only because it's getting a little tighter to where a lot of these deals that I normally would have bought, I'm staying away from. Like I have one that I could have gotten. It's a 3,000 square foot house, but the sales price is 500,000. My buyers are very limited at 500,000.
Yeah.
Yeah.
So I stayed away from it only because the resale would have been that high,
Yeah.
and I want to stay below that median.
I'm trying to play it conservative, but
Yeah, you just bought like 4 in the last week.
Yeah.
No, but the deals make sense.
Yeah.
I can still make money on them, or I can still turn them into rentals, and I mean the numbers still work out. But yeah, no. But before those deals came around, I was in one of those positions where I was like, okay, well, might need to start having those conversations with the guys, and I need to start leaning them out. Not with the projects that I currently have, because I still want to finish the projects, whether they're rentals or they're flips. I still need them to get done quickly. So that they're behind me, so that the rates don't continue to kind of creep up, right? But I needed to have those conversations with the guys that, hey, we're going to be slowing down.
And
I might
also
not be able to keep you guys
I might have to
committed.
have those with my guys pretty soon.
And don't the rates scare you for rental proproperties? Because I know for me, I'm refinancing 2 of them on Friday in 2 days, and the interest rate's 6.3%.
Yeah.
To where I refied one a month and a half ago and got 5.5.
Yeah.
Like, I mean, that's a crazy jump in a 2-month period.
It's a big jump. So it does give me some pause.
Yeah.
But I found a lender that's willing to hold or freeze rates for us for 60 days.
Okay.
So whatever I can do to make sure I freeze that so that it doesn't continue to go up.
But even at that point, would you get 6.1?
Then you have to.
One was at 6.1, the other one was at 6. Yeah.
Okay.
Which
So
is still a lot higher than what it was 8 months ago.
Oh, it was
absolutely.
Yeah.
But if the numbers still work out, then the numbers still work out, and I'll keep it. And I know that even if I have to swallow that pill down,
you can always
it'll still be worth it 2 years, 3 years, 5 years, 10 years from now, right? So I'm just gonna go ahead and swallow that pill, and even if I'm cash flowing less, I still have an asset. I still have $40,000, $50,000, $60,000 of ghost equity that's there, right? That might disappear, but then it'll come back in a few years. But I'll still put that aside, and then I'll still kind of continue to build on that portfolio. But eventually it'll get to the point, and we all have that point, whether it's a personal preference or it's just the numbers, right? There's always a point at that interest rate that it just doesn't make sense for you to do it.
Exactly.
Right? I might be okay with just coming out even and then just having equity. I might even be okay with just leaving some money in the deal, right?
Yeah.
But there'll be a point where that's unsustainable.
Exactly.
I can't leave $10, $15, $20, $25,000 in per house, and still be able to operate my business and have money to put the food on the table and all. Eventually, you just kind of have to give that up, and just stop.
And have y'all noticed appraisals are coming in a little lower too? I don't know, or at least for my 2 that I'm refinancing.
Yeah,
they came in a lot lower than I expected, and not a lot lower, but $20,000 lower.
Yeah,
which on a refi standpoint,
makes
that means I don't make $17,000.
Right.
Yeah.
So that's a big difference. Yeah, I had to leave $30,000 in the deal because my refi didn't come back, or my appraisal didn't come back where I wanted.
Yeah.
So I had one appraisal about 2 weeks ago, and it came in a little higher actually than what I thought it was. So
Nice.
It probably depends on who you get and what comps they use, and probably what their mentality is on the market probably does have a big effect on.
Yeah,
I agree.
On the appraisal.
Because everyone doesn't understand this, but appraisal is a personal opinion. That's
Yeah.
all it is.
It is.
It's
I mean,
a
they do plug
personal
it into an
opinion.
algorithm, but like they have a preference as to what
Yeah.
they choose.
They have a preference. Yeah, yeah.
And what comps they're
The
And they get to
condition.
choose their comp, the
Yeah.
condition.
Yeah.
They get to tell you whether your condition is nicer than the comps that they're looking at on
Sure.
the computer when they
Right.
haven't seen that.
Yeah.
So
Yeah. Absolutely. No, but it's a little
Yeah.
a little scary because like every time we have a conversation, I feel like whether it's every week, every other week, it's always changing,
Yeah.
always changing.
right? Like
Yes. From week to week, when we come in here, it's completely different.
Yeah, who knows? In a month, we might say it's super hot again. Bye, bye, bye.
And like on our last episode, we did of talking about the contractor or the prices of
Yeah.
materials and stuff. That's going to change because the that price for the floors at $2.50 a square foot. That's what it is today. 2 months ago, I was paying $2.29.
yeah.
So that's a 20-cent difference, which is $200 in a 1,000 square foot house.
Yeah, and that's one thing.
One
That's
thing.
just flooring. That doesn't include
Quarter
Uh,
shoe molding. Shoe molding, we have all seen that. I don't know about y'all, but
Yeah.
shoe molding has tripled in price
yeah
in the last 2 years. Tripled
Yeah.
in price.
everything. Shoe molding, windows,
Yes.
toilets, garbage
2 by
disposals.
4 is 4x, I
For,
think.
exactly,
Yeah.
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 So, I mean, realistically, we could do new updates every month or every 3 weeks, and it'd
Yeah.
be way different.
Yeah.
Now, moving forward, do y'all think y'all are going to analyze your rentals a little different? Because let's be real, here in the next 2 or 3 months, it's going to be 7%.
Yeah.
So now, how are you going to get rentals at 7% interest?
So my opinion on that is there's gonna have to be a better product out there that gets put out by banks.
For
So
investment
you,
property.
so you
For
think
investment
for
property.
investors they're going to drop
There
it a little
has
bit
to
or
be,
something?
man.
Or are you going to get back to balloon mortgages?
I think that's probably an option unless
Yeah.
somebody gets more creative with it. But I think that it will be a more attractive balloon, lower interest or
For 5
interest
years
only. Or
or
Honestly, I'd
whatever.
rather be on. I think I'd rather pay a little bit less points and be on a balloon in 5 years than to take a 30-year and pay more points.
So I think
Right,
right,
at these
now,
rates,
yes.
Yeah.
Which
I'd
I
rather
never,
get a commercial loan and have it
Yeah.
whatever or adjust the new interest rate in 5 years because
Yeah.
I doubt it's gonna be in the sevens. But
Would you have ever thought you'd be saying that?
no,
Because I never would have thought. I would
Yeah,
have always.
to
I've
choose
always
a balloon
dreamed
instead of a 30-year fix.
right.
Yeah.
I've always dreamed of a 30-year fix all my life, and
Yeah.
balloon just sounded crazy.
Yeah.
Because back in the day, I know a lot of older investors. That's all they have are balloon mortgages.
Yeah.
That's all they ever knew. Now they have switched to 30-year. Now they're switching back to 5-year balloons.
yeah, most of mine are on 5 years balloons that I got in like 2019 and
Okay,
2020.
3 years ago.
Yeah, so a lot of them are coming due pretty soon actually.
Yeah. And now what are you gonna do? Are you gonna do another balloon, or are you gonna go into a 30-year fix?
So the way it works is with these local banks, I'm getting like a let's say 4.5% interest rate
Yeah.
that I had back then. Whatever the interest rate is that they're giving out, it'll
They just
just adjust. So
adjust
let's say
to
it's
that.
5.5. I'll just have to
Okay.
pay a little bit more.
Gotcha.
Your payment will be more.
Yeah.
But there are some
The
of them.
payment would be more, yeah.
Yeah,
So
there's
now
some
your
of them
cash
that'll make
flow's
you
less.
refinance.
Yeah.
Which changes everything because now you went from cash flowing X to now you're cash flowing $200 less per month.
Yeah.
So now are you increasing rent to make up for that difference, or like how does that work?
Yeah, I guess over the 5 years though, rent's probably increased
Okay,
probably like at least 30% in that 5-year gap.
gotcha.
At least.
So it's
Yeah.
semi made up for it, and then
Yeah,
now, this is,
yeah.
now it's gonna break you back down to 5 years
yeah,
ago.
break me back down.
Yeah.
But at that point, sometimes if there's enough equity in it, either I'll sell it before that balloon comes due, or
Okay.
I'll refi into a 30-year, or refi it again and pull out more cash. But even though it's at a higher interest rate, as long as it meets that debt service coverage ratio.
Now, do y'all think for us as investors that our interest rates are gonna hit 8%? 7.
What are they,
8%?
7.5 right now? Probably.
No, well, 6. You guys got yours at 6.1. I just
Yeah.
got mine at 6.3.
Some of them are at 7.5 though. Didn't Robert just say 7.25 was the new one that he just got quoted?
So
at?
I think you can get 7, but that's you paying no points or
Yeah.
anything. Like I
And
mean,
your
that's
credit not being the best.
and your credit not being the best, under probably a 650 credit score, stuff like that. If you're over 700 and you're willing to pay a little bit of points, because I'm okay with paying points to get my interest as low as I can.
Yeah, for a 30-year fix, I'll do that.
So with my 30-year fixed, to get a 6.3, I paid 2.5 points. So
So if the interest rates are high, I probably wouldn't pay points to bring it down because I probably will refi it again.
You,
once
you
they-
think,
Refi
you think the
again.
rates will come back down later?
Yeah.
okay.
And you just refi then.
Okay.
But usually the break even's like what, three and a quarter years?
Isn't it
Yeah.
7?
The downside is if
Uh,
you get prepayment penalties, now it forces you to stay in it for 5 years or 4 years. Because I don't know about how your loans are, but mine are prepayment.
Oh yeah, no, I
penalties.
think mine are
Yeah.
4.321. Like
Yeah,
So mine,
7%.
mine
yeah.
are 4.321. Yep.
Yeah.
So, but it forces you to stay in it for 4 years, and not refi unless you want to pay a 1% penalty,
Yeah.
which is a big difference. Because I mean, what if things do dip in 3 years? Do you just suck it up and pay the penalty and refi it, or
If the values have gone up.
if the values? Yeah,
I'll pay an extra point. 2
But
points.
isn't if you refi with the same company, you don't have to pay those points?
I don't know.
Uh,
That's a good question. I've never done it, so I have no idea. I just know that I do have
Yeah.
prepayment penalties.
Yeah.
so do I. At least on my 30-year fix.
Yeah, on my 30-year fixed, I
Yeah.
do. Yep.
Yeah, but times like this is what makes companies get really creative.
So I was gonna
Yeah.
say that makes me even think more creative and go for owner financing and seller finance. It's like creative financing deals.
So-
Like
Subject
buy,
to,
Yeah.
buy owner financing or sell yours owner financing.
Both. I think both. I mean, at
You
this
think
point,
even
you
sell
can-
owner financing?
yeah. I mean, because even selling at seller financing, it's more attractive to some buyers coming in that might not want to buy right now, but they might buy just based off of you adjusting a few things. Yeah.
Actually, on that Petersburg house, I put owner financing in
Yeah.
the description. Literally, no one
Yeah.
called me about the owner finance. I was surprised. I thought at
Yeah.
least 1 or 2 people would be like, "Oh, owner finance!" Like in a Zillow search,
Yeah.
they put like keywords owner financing, and
Yeah.
nothing came up, or no one called about it. I was like, "Hey," because if I saw that, I was just starting, I'd
Oh,
be
yeah.
all over that.
Because I think that's going to attract me to talk to more sellers about owner financing. Because I mean, I just picked up one on seller finance at a 6% interest rate, and it was only because I'm getting 6.3 at the bank. Why not pay him 6%? Still 0.3
Yeah.
less.
Yeah.
So
And
I think
inflation's
that-
8%, so
and
you make-
inflation's
win-win.
8%. Yeah. So I think it's going to change the way we look at deals and how we
Yeah.
structure them
Yeah.
moving forward.
Yeah. Yeah. No, we're gonna have to change as banks change, as the deals change, as
Yeah.
because we're gonna have to change the way that we're financing our
Yeah.
deals, finding our deals, what we're
Yeah.
doing to our
Yeah.
renovations. Because I mean, it's getting pricey to do all the renovations that I used to do on houses
Same.
just on a normal basis.
Yeah. And depending on your price point of where your market value is,
Yeah.
it changes what I'm planning on doing because I'm staying away from these higher end houses. I want to stay under the median
'Cause
and
the risk-
well under the median.
Is it
Because that
of-
median at 400,000 is not the median in Richmond.
No.
The
no.
Richmond median is probably in the 300s.
Yeah,
I'd say
yeah,
320 range.
Yeah, 3 1/4, I think.
Yeah.
Yeah.
And I want to stay under that.
Yeah.
Just because, I mean, you have a lot more buyer pool if you're in the 200s
Yeah.
versus you are in the 400s.
Yeah.
Especially
Absolutely.
now with 5% interest rates.
Yeah.
Carlos has one coming up for over 400.
Yeah. So I have one coming in at
450,
390. 390, so I'm a little scared.
Yeah.
And I have one that could work on. I bought it, but I think I'm going to wholetail it just because I don't want to be in that $500,000 price range.
I would.
Yeah. And if I were to
And you
fix
make
it
some
up,
good money on it too.
exactly,
as a
make some
wholesale.
good money and wholetail it and not worry about it.
Scale
Let
down.
somebody else have to deal with that problem in 6 months when they go
Yeah.
to sell.
Yeah.
Yeah.
Because it's easily a 6-month project. And when you're finished, $600,000 house all day, 5,000 square feet.
Yeah.
But do you want to take that risk or let somebody else have it?
Yeah. No, if it's a pretty decent wholesale,
Yeah.
I'll just unload it. Yeah. I don't know.
I mean,
Yeah, so I guess
So
the
many
moral of the
houses.
story is there could be a market crash or it could keep going bullish for we don't know. We're not economists, we're just a bunch
We're
of
not.
ding dongs in Richmond.
Yeah.
Well, Carlos is a ding dong. But that's our just expectations on the market.
Yeah.
And again, we could be completely wrong, and I would not be surprised if we kept seeing an increase in prices either at the same time. But
Yeah.
I guess we'll have to look back at this video in a year and see how right we
See
were.
where we're at. Yeah, the ding dong fed.
All right, Generation A.